Welcome. Welcome back to this live session, traders. Another one after the successful previous session that we have seen. Past session was the market is really trending at the moment, and we can see there is a break of structure here at the moment in this market. So we'll be looking to find a potential trading opportunity in this session. We see some sideways movement, and at the same time there is a stronger bullish price action has shown on the intraday perspective. Ready for a possible trade setup this session? I'm looking at every member to show up. Thank you very much for joining here. Let me know if you are here so that we can begin today's session. Welcome back to this live session. Now, this is where looking for better trade setup, and the market currently breaking a key level on this lower time frame. And after break of this key level, this is where there is a significant breakout. I'm here. Thank you very much. Good evening. It's nice having you again. Thank you very much for welcome. Nice to see you, all of you here. Before we start, make sure you like this stream, guys. Smash it, as we are starting another trading week with increased volatility. So if you look at its increased volatility, okay, so with this increased volatility on gold, and the market from this consolidation has broken below, with that break below here on gold, that expecting this market to potentially to retest and then to return again back above here. So looking at first of all daily chart to see how the market structure is creating here. So this is the daily price action on gold, and with this daily price action from this level that you can see created this move back to the upside here initially. So what kind of market structure that you have seen once the market opened from there? A strong breakout, right? And looking at the monthly, that's where the market has started its move from this support level. If you look at the weekly here, we can see also that bullish impulse on the weekly. And with this bullish price action from the weekly and monthly, you can see it's creating that series of higher low. And with that series of higher low creation, with a series of higher low, the market is maintaining that uptrending market structure, right, which is eventually a strong bull market on gold. And overall trend that we have discussed in our previous session as well on gold is bullish. Now we saw that 3 weeks the market dropped to a key support level, and as the market dropped to that key support level, the previous week was, as due to the shutdown, we saw that there was a low volatility. Past week was the lowest, and the market started to move. Let's look at what's happened the latest. I think that it's over. So the shutdown is potentially to end, and that has given really good move in gold. That's what we are at, that the market is in a bullish impulsive move on gold, and giving a possibility that this market potentially to continue to trend as long-term trend in the market is bullish here in that area. So looking at the 4-hour perspective on gold from the intraday, we can see that this is where there is a 4-hour move from this support level, and that's where a move followed by this pullback, and expecting another move back to the upside here. So that being said, on this market, on gold, currently it's in a bullish trend, and in that bullish trend, this is where an important support level on gold. And with this support level, what we are expecting that this market to potentially to retest that low, the previous 4-hour support that you can see on gold, is because there has been back-to-back 3 bullish move, bullish candlestick pattern. The previous one, any retest of that level, that means 4071, is an important support level that we are looking at this market to give us an entry opportunity in that market to see where the price is heading to. And with this movement, as this is a key support area on gold, and this is also the 1-hour support level that you can see, and in that 1-hour support, expecting the price to respect and then to potentially bounce off that level. And that's where looking at a lower time frame entry. So if you look at here, you can see this is a consolidation pattern, and expecting it to drop back down, potentially break that low, and then to revert again back above. So the downside move that we are looking at this market is an important area, because it has shown significant bullish move. And what the market started today, if you look at the daily here, it's not gonna end again, right? It's gonna go potentially where it started to move back again. Do you think so? That means break of structure back below is a buy opportunity, not sell. Let me know. You think so? Are you buying to gold today or selling? Let me start a poll again. Let me know what's your thought on gold here. Now here is the consolidation that if you look at, and that consolidation pattern in this area here, a pretty bigger consolidation if we look at the 5-minute chart. What we can expect here, the market to drop back below to that support and then to return again back above here. So therefore, looking at that area for us to get into the bullish entry opportunity here in that market. Welcome. So overall trend is bullish. We are looking at this key level for an entry. The key level understanding will give you a better, clearer ideas of how the market might be doing from the longer term picture. So until the price on a sideways, this is if you look at after big trend from Asian session to doom boom till the London session, every hour there was a strong trend, and now in a consolidation. The current low is here. The current low on the market is here, and with that retest of this support on this market on gold is we're expecting that this market to return back again to the upside here to create a new higher high. So this is a current consolidation pattern where there is a liquidity gap, bounce back to the upside, and what we are looking at this market where from that level the price to potentially drop to that low, and that expecting the market to trend extend back below and then to return again back above here in that market. So looking at a possible bullish entry opportunity from this key support level. The price here, if you look at, this is a 30 minutes 10 EMA, and we see there is a candle close coming. We might find possible short-term bullish entry. Ready for an entry here in that market. And with this structure, if you look at, this is a triangular pattern, and also this is support level. What are you expecting the market to break that low and then to revert again back above here in that market? So breaking below can give us an entry opportunity. So looking at that level, which is a key support level, and where the market is, it's a key support area that expecting the market to trend and then to revert again back above here for another upside bias in that market. And that's what we are looking at, a possible bullish entry opportunity for another test and then reject back again in this market. So our goal here is to find a trade in the direction of the major trend. So we are looking at possible entry. So this is a channel that you can see in that area for possible another test and then revert back again in the direction of the trend. So we are looking at here for bullish trend and potentially to retest that support and then revert again to the direction of the trend. So looking at the 1 hour as well, this is also a bullish market structure in this area, and that's where the key support level that expecting the market to revert 4-hour chart, which is also support level, and so here is an important area. Now looking at the 1 hour perspective, that's where the market is showing up, and looking at the lower time frame, the price action to bounce off that level. And if we look at this lower time frame on the 5 minutes, and the 1 minute chart, the support is here, and you will be looking to see break of that trend for us to go for an entry. What's your thought on that? Also share your current trade setup if you have any one, if you're trading any one of that. So this is where I'm looking at this level or breaking further back below to this support level here. Welcome, welcome, welcome. The market trend is up and we are possible bullish entry. Good day, welcome. Now breaking below, especially to the 4-hour or 1 hour support, is essential to see that the market is heading back above here in that market. And waiting on an entry from a very important support level here, from this key level. In the meantime, if you haven't liked this stream, I would appreciate if you do so. And also subscribe to the channel if you haven't done yet. Press the notification bell so that you are not missing any of the content that I'm posting every day. Now, when we are opening position on the lower time frame, especially if you are trading on 1 minute chart and 5 minute chart, you take a trade today, not yet we had open position in our automated system, but we have a different strategy. But for our regular trades, we haven't opened yet in the live session. In the previous live, we haven't opened anything. This live also looking at entry for any bounce from this key support level. So what do you trade? Trend line. We trade breakup structure. So we take breakup structure. Now, I don't trade trend line. I don't trade because the trend line is not always uniform. Okay. We trade trend and breakup structure. So how do you then find that breakup structure? First, to understand the trend line, BS retracement, breakup structure from a trend, okay, from swing high and swing low. So if you look at a market, first of all, the precondition of a trending market, you need the market to create series of higher high and higher low. Okay, so the only way you can find a trend in the market is by identifying the market structure. I do use indicators so you guys can see that 10 EMA and 20 EMA. Breakout or wait for retracement? No, breakout. Breakout from the trend and then revert back in the direction of the trend. So if I give you a clear diagram of what it is, let's see here. Now, if you look at the market is trending, how do you identify the trend? You know, you can use 50 EMA, 100 EMA, SMA, 50 SMA, 100 SMA, or you can use 20 EMA, 10 EMA. But nothing is accurate except if you see the market structure. So if you look at a market is maintaining this, okay, that's an uptrend. Now, once you see that, you can identify those swing high. Now this, if you look at, this is a trend line, right? But more often you're gonna see that the market structure is not arranging in that way. The market can be like that. You see, let's say big move and then small pullback and then another move like that and then pullback and then another. So the market is not in fact following a smooth trend line, but it's gonna always, you'll find that series of higher high and higher low. So more pullback, that means retracement. And then at some point you see that the market has completely broken from that structure. That means the swing low that you have seen has been violated, has been broken. And those swing lows is broken and violated. The market is potentially too ready for possible buy. If more often, yes, the market will be buy because it's not a change of trend but a pullback. Don't you find a lot of fake bows? Yes, that's where the opportunities. A lot of fake break. That's the nature of the market, and we trade that fake out, because if you see that there is a fake out, that's a very good fake breakup structure. So if we are in the same point, but the fake breakup structure will give you entry to the trend. So for example, if you look at a market is trending, okay, the real breakup structure will be that the market has broken from the structure, retested, trend change. That's a valid. But the fake breakup structure is the market trending, breakup structure, boom, bounce back up. That is what we trade, the fake breakup structure. Because once the market creates that fake breakup structure, it gains momentum, and you have a incredibly high probability that the market will be again in the direction of the trend. So that is where we are looking at an entry in the market, which is the best way to trade the market, always to find those fake drop and then to trade with the trend based on that structure. So as the market is now in a, if you look at that move, there is an inverted head and shoulder breakout pullback. So you see that this is now in a trend, and in this 1 minute structure, there is no breakup structure. It's with this inverted head and shoulder. It is started to trend here in the direction of the major trend. And that's where breakout pullback, the market is maintaining that uptrending market structure. And with that uptrending market structure, the price action is showing up to be significantly bullish here, right? So we want to see that the market has broken out of that structure and then having the trend again back above here. For example, looking at current price, we broke that, all making a fake breakup structure. And how are we going up? Don't you find a lot of fake? Yeah. For example, looking at current price, we broke that, all making a fake breakup structure, and now we're going up. Lower low. Yeah. So this is what exactly it is, right? So you see that the market has broken from that structure. Especially if you look at the 1 hour, you can see those candlestick pattern. Okay, so you can see that the price has broken back below here. It's a fake drop, and then return back again upside here. And with that breakup structure here, as the market has, if you look at the 1 minute, it's a complete break below. And with that breakup structure, expecting the market to bounce off that level with a liquidity grab and then continue to rise here back above in that area. So this is the, if you look at, this is the breakup structure and the market is trending again in the direction of the trend. Now there is a multiple liquidity sweep. It's slowly breaking above again to the major direction of the trend. And with that 4-hour chart also bounce off that level. Only take Euro USD. We do look at Euro dollar and including gold as well. Can keep on the watch list while we are looking at gold. Also Euro dollar. Where's the chart here? Euro dollar, if we look at the daily market here today, after this previous daily move, there's a gap open, tested the upper shadow here and created this price action on the 4-hour chart with a long wick candlestick pattern. And from the lower time frame here that you can see on Euro dollar with a double top, there might be here a bearish price action in that area. So Euro dollar, if we look at the longer term picture, is that the market to test that support and then to possibly break further up before it potentially drop down. So lower time frame on Euro dollar showing that the market from the daily, once the market opened with a gap, it has shown that significant bounce back above here in that area, which is in a key level on euro dollar. So there might be some sideway market on euro dollar, but short term we could see potentially a bullish move in that area. We can keep on a watch list for any entry coming along the way. We won't be able to miss it. While we can see gold currently again here, looking at the 1 hour. I'll be re-looking at the market structure as in 10 minutes time this candle is closing, and in that market structure here on gold, with this long wick here, this is a long wick in that zone, and as that long wick has formed in this area on gold, the price may already, we see the price has tested that lower shadow and got the rejection back above, and as the price has tested the lower part of this previous 1 hour support, we see there is a rejection back above here. And with that rejection, the market is in a trend here at the moment. So with this bigger head and shoulder formation here in that area, where with this big head and shoulder, expecting that gold to possibly to trend back down well below in this area. So with that move, looking at the market structure to trend back up. So here it is still bullish, but we are looking at a market structure where there is price testing that support and then getting the rejection again back above from that level. So that's where the actual entry opportunity here in that market, which is a support level. Welcome. Good day. On the 15 minutes, lower low, lower high, high high for mark. Yes, of course you do. You can't read market structure. You can't read market structure without lower low, lower low, lower high, higher high, higher low. That's the foundation of reading a market structure. But if you want to identify the breakup structure, you want to see that those lower low, lower high, or higher high, higher low has been broken, and then the market has created a new structure, and that's where the actual trading opportunity comes in play. So this is where we need to look at this market for an entry for the next move that we can see in the market. And this is, if you look at that market from this level, you can see it's a potential break below to this support level. And so here is a consolidation pattern, and we are looking at 1 hour candle close shortly after. And this 1 hour pin bar with a bullish impulse in that area. And that's a support area that looking at the market to break below, potentially further down here, and then to revert again back above. So we are looking at an entry from a key support level. But if you long week candle, there's a breakout now in a pullback. So probably you'll be able to find an entry shortly after the break of this support for another flight back above to this level, 4086 or above, which is not a very big move, potentially nearly to 45 to 50 pip. The market manages to break this resistance line. We will be looking at that entry. So when you are looking gold ahead, I think this week, this week, gold started with a bullish impulse, right? That's the best thing. There's a saying that you can predict the morning by looking at the day, isn't it? Or the other way around. You can predict the day by looking at the morning. Sometime, not always, more often or not always. But if you look at today's market open on gold, which is showing that bullish, and that's where looking at the weekly market structure from this support level, that you can see that there is no effort from the seller and the overall trend is bullish. So the possibility here that gold to bounce off that level is higher. So you might see the market to potentially bounce back above here in that market. Now here is a, if you look at, there is a pattern which is a reversal price action pattern here. And in that reversal price action pattern, expecting the market to bounce off that level. Okay, getting back above here. Okay, so with this bullish engulfer back above here, with this move trend pullback, and we see that another uptrend here in that market, and that's the price action that you can see the market up showing up. 1 hour candle closed here with a bullish engulfer, and now the next one to possibility breakout or drop again back below for another retest. Both possible, the market to drop again back below to for another retest, or to revert again back to create a new higher high. And the current support is here. It's a uptrending market again. We're looking to see possible bounce off that level. And as the market is trending, which is a really good area that we are looking at this market structure to break above here and then to create a new higher high, in that market, in that direction of the trend. So as we see that there is this is a 1 hour market structure, which is a stronger bullish move that you can see. So where you're looking gold ahead this week. Okay, so we have discussed on that. Now gold this week, as we see that there is a very stronger bullish move back to the upside on gold, and that is one of the biggest reason for this move what's your thought on that? What do you think? Then I will be discussing also what I think, but I would like to see that, guys. What do you think, that what causes gold suddenly to break out today? What is the primary cause for gold to have a bigger bullish impulse? Okay, so we had a previous pool that got nearly to 66% bullish and 34% bearish, and that was ended to be almost exactly. So well done, guys. You know, when we use the pool, and I interestingly have seen that the pool results in this live session, if we look at all the pools, incredibly over 90% time you guys are correct. Really, that's well done. So don't miss out to cast a vote on pool, because I'm gonna show you now the next results of the pool. So before it happens, you're gonna have a very good understanding of the pool. Every time we will be posting a pool, we will be showing you the live results here. So make sure you cast the vote on pool. Now, what is the main reason for gold to bounce today? And I'll be giving two reasons. Let's see that which one mostly you guys are thinking. So one is US shutdown, like the government shutdown is over. The other one is technical. So let's say some might think that there's nothing with that, it's all technical. Okay, so share your thought on that and cast a vote. Let's say that how many percentage think that it's purely due to the shutdown is over. So there is volume coming, institutional trader coming in the market, they're putting more volume, or there is no reason that it just purely technical. And if that's the case, you can also cast the vote to see. All right, so now on the 1 hour, again looking at gold here, from this high there is a rejection from this higher price, and that is the support with a bigger move back below. And with that rejection from this higher price on gold, they're expecting the price to potentially drop further back below, and to even come to that support level here. Okay, so with a bullish engulf followed by a doji, another bullish move that we can see in that market. Gold could move high to 4100. It's near there, right? Not far. So 4100 is only 150 pip. Very likely it's in an uptrend. We are on that. We are looking at that entry here for this move back to the upside, right? So it's in an uptrend here. Now this is 5 minutes price action that you can see. It's showing up to be again bullish, that you can see back above, and it has completely broken out of that resistance line now. So the current support is here. We are looking at entry from this key level. Ready for an entry? We'll be looking to see that from this key support level. For 100 is psychological level. Psychological level, all those round figures are psychological level, but psychological level normally is very relevant for sell in a bull market. So, or closing position in that level. Normally 4100 wouldn't be a very important psychological. 5000 is an important psychological level. Okay, so if you look at the 5000, that's a significant level. 4100 is each 100 pip. You can see 4104,200. But for the lower time frame traders, yes, that's something that we can look at, but it's not a very I would say that it's not a very important level that where, let's say, you need to close your trade or probably modify, because it's just 100 every 100 pip you will see a round figure 4100, 4200, 4300, because in gold 100 pip is not such a big move in terms of, yeah, if you are trading with, let's say, 20 pip stop loss, 100 pip, that in our previous trade that that we have opened in our system, if you guys were following our automated system, you could see that trade in your account as well. So looking at that, that's a 100 pip, but that's a significant move, right? So if you look at bigger win is the secret, you can see that the entry was 4075.82 and TP target 4084.96. so basically 75 to 85, 100 pip, boom, that's a one single move back to the upside. This is, we have opened, I have already shown many of the details in the group. If you missed that, I would highly encourage you to look at that here. And therefore, looking at that lower time frame, this is an important support, waiting on the price to possibly break that low and then to bounce off that level. Okay, now from the 1 hour already it has created this impulse from 4084 level, right? A bounce back to the upside. And with that bounce back to the upside from 4084 level, okay, now dropping below, back below is the level that we are looking at now for an entry back above. Welcome. I think it's more of the technical analysis side. There's a daily order block in 39,00800 zone. Also formed a daily double bottom from that zone last week from a weak candle. Now, and if this week's candlestick close bullish, then it will be an engulfing. A nice thought on that. A very good point of view. So now the technical is influenced by also the fundamental, right? Because one thing that you need to very as a trader, that's gonna open your eyes clearly. Every candlestick pattern that you can see is formed by order block or order, the transaction between the buyers and sellers, right? So the structure that you can see, that order block is created based on the fundamental. So if you look at the daily on gold, what do you see? That this structure, this is the Friday's candle, right? And once there is a announcement for potential ending of the shutdown, there's a volume come, because past week there was a volume. If you look at this, is a almost a completely narrow sideways market on gold, and all those orders that waiting to go to the market has created that pattern in that area. So that is where the market structure build that momentum for another break to the upside. So fundamental has given a boost while the technical has formed. Now, if you truly want to be a successful trader, okay, a successful day trader, swing trader, scalper, guys, before I progress further, make sure you like this stream and also subscribe to the channel. If you haven't done yet, press the notification bell so that you are not missing any of the content that I am posting every day. Thank you. Oh, awesome. Now, every technical move that you can see here, okay, also has a fundamental root in it. So how the fundamental then influence the technical? Let me give you a complete picture of how you can use the fundamental and technical. There are, how do I define you that there is no two distinct criteria or the parameter of fundamental and technical. They are inseparable. That will change the you look at the market. Imagine that you take a stick, and you take a stick and then you put it on the, like, hold on your hand and just taking left and right on the top of the water. So you'll see that the water will divide and then will collide together. Divide will collide together. So there is a relationship between how the water is moving with the stick in your hand. So there is no distinct parameter in this relationship between the water and stick. You cannot separate them. That means if you don't have the stick, then the water wouldn't move. If the water moved, then you had to have that stick in that way if you wanted to move. So the technical and fundamental is like that. You cannot separate them from each other. They are complementary. So they are not distinct. They are complementary, if I use the right word. Now then, how do you use that fundamental with the technical? The fundamental boost the technical. That means, imagine that let's say you created a robot to walk in a zigzag pattern, right? Like that. Now, what if the robot doesn't walk at all? It's just standing here. And now you need to give it electricity. Otherwise, the robot will not move. It's just standing here. Now, the more power you'll give, the more it's gonna move in a zigzag manner. So that electricity or the power that you are giving to the robot is fundamental, and the robot, the movement that you can see, the zigzag pattern, the output is the technical. So when there is a boost of fundamental, the market will give you a printed technical structure that you can follow along. When there is no input from the fundamental, the market will not show you any pattern. So the technical is basically a trajectory of the market movement based on the order flow in the market. So then how should you trade? You have to both combine together to find a balance of trading in the proper direction. There will be more information that I will be sharing later, but just want to keep in mind that they are both inseparable and has to be together to become a better trader. So you don't have to become expert macroeconomist or microeconomist or both or neither. What you need to become is understanding what is happening around the world. The events will influence the pricing. For example, shutdown. Okay. Now, when it is over, then what kind of influence the market might have? You don't have to know anything. Just know one thing. After a big holiday, everyone will rush onto the work. There will be more order in the market, not closing the order. There will be more order coming in the market. That means there's a possibility of volume in the market. That's where you need to know. And then that will drive the technical. Because when the market has more volume in the market, the trend become more vivid and you can trade it very easily. That is technical. So that's what you need to look at. So another way, when there is a good fundamental, there is a good technical. When there is a good fundamental input, you'll see that more clear and predictable trend in the market that you can trade, which is technical. Okay, so let's look at now. Therefore, to predict a good trend, you need to know the fundamental, that there is flow coming, so the market will be more predictable for entry. And then you use the technical to enter based on the market structure, which is more predictable now due to the fundamental in the market. I hope that that's clear, then clearer. Okay, so now you can see the market is now heading back to the upside in that area. So looking at the 4-hour chart, it's a 4-hour bullish impulse. The price has completely broken above here in that area. If you look at the daily chart, this is a daily move. There is a daily bearish fair value gap. Okay, we discuss about the fair value gap later. earlier, we could see the market to further bounce off that level. And now if we look at the 4 hour here, that you can see from the support level, a bigger bounce back to the upside. Here is the liquidity zone from the 4 hour, which is pretty stronger bullish impulse back to the upside. This is the current nearest liquidity zone that you can see on gold. Yes, thank you very much. Yep, awesome. Now, here is if you look at that move from the 4 hour, a pretty stronger bullish impulse back to the upside. And with this bullish impulse on the lower time frame, the market is showing up to be heading back up here. So looking at that level, this is a liquidity zone in that area. And we might see that nearly the market to basically 130, 140p potential move back above is possible. So our goal here is to look at that entry. So you can see after this consolidation, it's completely has broken back above. This is the 30 minutes candlestick closing. And with this candle close, if this the next one is, which is a possibility as well for coming for retest, we will be going into that entry around 4086 level. Let's see that how the market is reacting to that level. Patience is key. We need to enter here for an entry as bounce completely back above. We want to see a breakup structure here now. Now we see there is a lower, if you look at this 1 minute chart, sideways market, and expecting now a potential breakup structure to possibility to drop back below any of this key level and then to trend back above. This is what you're looking at this market. Okay, so that breakdown that you can see currently, on the 1 minute chart could bring us possible entry criteria here. So I'm looking at 1 hour support or the 30 minutes candle closing in 2 minutes time. So 30 minutes support, also the 1 hour support, that 2 level is important here. So we'll be combining with the 5 minutes and even the 1 minute to see where the market is heading. So we either will be using the pending order or market order as soon as we see the price giving us that possible entry opportunity here in that market. Why we missed a big move? From the philosophical perspective, though you are trading, or that from tech or trading psychology perspective, that you need to miss a big move to become a trader. Keep in mind, guys, this is very important. You need to be able to miss a big move to become a better trader. You don't need to take all move, but you need to take the move that when you are directly in your strategy. The market will have move always, and every move is different. Some move you'll see that without pullback, and you don't want to take a move that is without pullback. That is not a healthy move. That might be a false breakout. So FOMO is a big part of losing big. Okay, fear of missing out. Now this is a societal, also the programming, that if you look at the fear of missing out, right, and that's where from very beginning. So you have to be aware of that in trading, not to use it. So that internal voice, okay, if you are a trader, any kind of trader, as soon as you said that you missed a move, that gonna create a very smaller voice in your head that I missed a trade or I missed a move. That will affect your next trade more often, and the next trade could be taken based on not to miss rather than to take based on the strategy, and that's starting of a losing trade. So it's always important that you practice patience and don't take any trade until you see that that's your trade that you want to take. And that's where, because as long as you're not taking the trade, you're not risking anything. But when you're risking, you need to risk with a high probability setup. Okay. Now, this is the 1 hour price action. Looking at the 30 minutes, here is the support. That's an important support level. Okay, so what we are looking at, guys, is to break any of the key support level before we look at the entry here in that market. So that's where support level that you can see the market is creating. Ready for an entry here. I'm waiting to see the market breaking that low, potentially to break further back below here in that market. Okay, so from this support level here, the market is trying to break that high, and so the current level of support at 4091, the market is approaching that 4100. Okay, so this is the level, the price potentially to reach that here. Now you want to enter a bullish trade for this smaller move, which is a high probability setup, and from a key level. So currently the market is respecting this 20 EMA on the 1 minute chart. If you look at waiting on a stronger break below. Is there any news coming? I think no, there's no scheduled news. So that means breaking that low can give us good entry opportunity. In the meantime, traders, if you're enjoying the live session, make sure you like the stream and also subscribe to the channel. If you haven't done yet, press the notification bell so that you're not missing any of the content that I'm posting every day. There's a look that you can see the market to drop back below to this support level, and the price is approaching that zone. Okay, coming to that support here, the market is approaching that level where there is a high area of value, and potentially to come back below here. I'm ready for a possible entry. So 30 minutes chart that you can see created this support here, and we will be looking at entry at 409394 in that zone with a nearly to 50 pip stop loss. Still not yet, or we can use pending order. Let's see how the 1 minute price action being created here for possible upside, because if the market break this swing high here, we can expect a break above here. And before moving back to this long term, that means at 4100, looking for this market to grab liquidity from this support and then to trend. The market on a support at the moment from the intraday, so we will be using pending order. That means buy stop order here above this level if the market cross that high, and stop loss will keep below this support level, which will be nearly to not a big 36 pip stop loss, and we'll keep the TP target at 4100 TP1 because we don't want to take above that level. It's a lower time frame for high probability profit target hit, so it's gonna be a buy stop and gonna be buy stop for this upside. Buy stop at 4095.50. Stop loss at 4091.81 and take profit target above at 4099.50. So pending order. So if the market going back before we enter, we might be able to enter by market. So place pending order in that area. If the market breaks above, we will be on the trade and we will go out with this trade to the upside expecting. If the market drop down below here, we are not on the trade. Getting some rejection above. Okay, we are on the trade. It's very tight stop loss, so we'll not be running too long. Wanna see that potential breakout. Here expecting to bounce off this to nearly to 39 pip to 40 pip, and boom, that's one. I want to see the price to bounce off that level to create a new higher high. And if we need to re-enter, we will be re-entering as soon as we see that the market has given us further move back again. We're still on the trade. And if the market doesn't work in our favor, we'll be sitting with the minimum pip. That means 36 pip. Running in profit here. Again, looking forward to see bounce off that level. And okay, want to see break above here in that area, and want to see that moving back to the key level 4099, or even up further. Expecting it to break that high, continue to rise back to the zone where there is a high area of value. Awesome. Getting my point? Want to take the first trade? Maybe not a big one, but want to take the win one. That's where you're looking at. High probability win is more important than too big trade. We want to see that winner. That's one more rejection back, expecting cross that high. Now there's a liquidity gap, expecting reject back again. Looking at this market structure, entered in the profit area, but we want to see one more bounce back above for us to be able to take the full profit. If this candle, the 1 minute, is not closing as a bigger red candle, we can expect further upside here in that market. Now awesome. Want to see one more break to the upside, ready for closing once the price will break that high upside. Want to see break that high and then boom, bounce back to the upside here, going back up here. Awesome. And I would like to see, guys, a feedback in the live chat. If you're enjoying the live session, we are running profit here. The first trade you will be entering more, expecting it to go back to 4100. I'm still holding on to that. We might get a TP hit directly by the market. Boom, TP hit. Boom, boom. TP hit on gold. Straight directly to the profit target, 40 pip. How did you feel that about that trade? Say yes in the live chat. I would like to see how many members saying yes with this trade. awesome. So target price, yeah, welcome. Straight, yes. Element Puri, and great. Thank you for that. Can you continue buy? We see that pullback, and now the market reached that 4100. We might see the deeper pullback. We might see now potentially deeper pullback, and that could bring that market top again back for deeper pullback. So because it's on a bull market, we will continue to trade in the direction of the major trend, and we'll be looking at entry in the direction of the trend. So this is what we are looking at this market structure to show that the price action, to show up possible entry to the major direction. Okay, now next trade to look at for another entry. This is a big one. This is what in the beginning that we're talking about, that we focus more on high probability. Okay, so the probability is very important. How do you understand probability? Sometimes probability is misunderstood. We think that probability means that either right or wrong. That's not right. That's wrong. That's not probability. Okay, the probability is right and wrong at the same time. Can you be right and wrong at the same time? That is probability. It's very difficult to grasp that concept, right? If you don't understand, you can look at the thought experiment of Schrodinger cat experiment. Okay, so Schrodinger had in his thought experiment, he found a cat in the box, and then he asked himself one question, that if the cat in the box, then if you don't open the box, what is the status of the cat after extended, like some period of time, right? Let's say the cat doesn't have any Facebook, so you can't give any status, but what will be the status of the cat in the box if you don't open the cat? So the answer coming from our certainty point of view is that the cat is okay, either dead or alive, right? That's how we think in terms of our mind, black and white. We jump on the conclusion, but the probability is that the cat is dead and alive at the same time. That means it's in a, so there is some conclusion comes in play, right? But you can't conclude, because until you open the box, it's in a state called the superposition. The cat is in the superposition of being dead and alive at the same time. Now, if you open the box, and then you will find that one outcome happening at the same time. So how does it relate to your trading? When you open a position, so have you ever thought that this is, when you open a position, the position is winner and loser at the same time until you open the box, until it goes in one either direction. So that means your trade is in superposition of being winner and loser at the same time. But now, that's not a 50-50, right? But still you can guess. Let's say the cat, you didn't open the box, but the cat is in the superposition. But there is still a probability, right? Let's say you in fact open the cat after 3 months and you found the cat dead, the cat is dead. Now, even though you know that it's in a superposition, but then you found the cat is dead, how can you define that certainty? Based on other confluences, that is probability. But still you have a probability for the cat to be alive. So you can't say that 100% because you found the cat dead doesn't mean that it's always dead. That is understanding probability. So there is still always there is a probability of finding the cat alive before you open the box. Now, therefore, until you find when you find the cat is dead, until you find the cat is dead, your probability will never be 100%. Okay, so, but your probability will increase even, let's say 99%, 90%, like that, or even over. Your probability will increase with different confluences, time delay, oxygen, food. That will give you more and more confluence on your probabilistic edge in the market. That is trading, that is being a trader. And that's where you use your confluences to stay in the higher edge of probability. And if you put 10 balls, let's say 100 blue ball, 10 yellow ball in a box of jar, it almost certainly you're gonna put a 10 from 100 blue ball and 10 yellow ball, very certain that you're gonna catch a blue ball in your first pick. Very few, little probability that you're gonna pick a yellow ball, but still you have a probability to happen that. So that is understanding probability. Once you understand the probability, you understand trading. The market is now trending. So you understand trading means that you understand trend, you understand probability, technical analysis, fundamental, as well as develop a strong trading psychology, that you become complete, full-blown trader. Not blown means not blown, but the knowledge and compatibility, skill set, becoming a better trader. Ready to become a better trader? Say yes in the live chat. And if you are ready, then there is a rare opportunity to join here in the academy, and it's gonna probably even tonight or this week. I'm not sure how many spots we have to take on the mentorship to trade with me in the academy, in live trading room, where also you can access my trading tools. Right now you can join what I'm online here. If you join now, make sure you check your email for the link of the premium group, including your junk folder. So you can click here to join. You can see that. Click here to join. It's now 95% off, nothing in comparison what you have seen so far today's live, including what you will be learning. Before you jump on the website, make sure you like this stream, and also don't miss out to subscribe to the channel. Also join the free Telegram as well for regular update and education that you can see. Link below this video. Also, I can share with you the link here in the live chat. Share with you the free Telegram link. Thank you. And let me know if you have any question. We'll jump on the next trade setup. Still more to do, still long to go. Now just beginning with another trade setup coming potentially. Let's see that when you can get that. But before we do that, once you are on the website, if you have any question also, don't hesitate to ask here in the live chat. And let's see what is the next trade setup coming. Welcome. So there is a FVG here now currently in that area that you can see. Let's look at that area in that zone, how the market structure is creating that FVG with this bounce back to the upside from this support level. We can see the market in a sideway, and with this move here, price action here maintaining that uptrending market structure. So with that movement that you can see, expecting the market to potentially reject back again. Here is the support level now for us to re-enter again, as the market structure is showing to be significantly bullish here in that market. So now looking at the completely again fresh perspective in the market. Now always looking at fresh perspective will give you how potentially the market is rearranging itself for a new move always. Now looking at the daily, this is the daily resistance line here that you can see, and in the daily resistance, I wouldn't say it's a resistance, a liquidity zone. Okay, resistance is where there is a possibility for rejection. Now we see that the market here, it's a liquidity zone. So with that liquidity zone on gold, there is a pure FVG. This is also the weekly high. And if the market is approaching that now 4108, that means 4110, which is not far. Okay, we are around nearly to another 100 pip. And that is where we are looking at our next possible entry in that market for bounce of this level, because it is where the entry criteria. That's an important support that we are looking at. If you look at the 5 minutes from here, pretty stronger break below. And from the 1 hour, this is a key support above the 10 EMA, and 5 minutes candlestick pattern dropping down to that support is an entry criteria here in that market. That's what we're looking at the market structure. I'm looking at for our next potential opportunity here. The buyers is still buying whenever the market is coming down here, and the current support at 4096 on the 1 hour. This candle, this 1 hour candle that you can see here is still premature in that area. So, and that's the price section that I'm looking at for our possible next entry opportunity here in that market. So there is a move with a bullish bounce in this area. there is an inverted head and shoulder being formed, and that may bring again another possible break to the upside, and that might form an potentially an inverted head and shoulder in this area. And with that inverted head and shoulder, the market may potentially bounce off that level to create a new higher high. And with a long wick, multiple doji here in that area, we may see the market to potentially to trend again here, and that's what looking at the potential market structure in this area. And so with a 15 minutes long doji here, and from this support level we look at it's a bigger move back to the upside in that area. With a long wick doji, this is where there is a high area of value, and with that high area of value from the 1 hour perspective, it's a support level that looking at this market to potentially drop down back to this support and then to possibly return again back above here in that market. And that's what we're looking at, this market structure to break in the direction of the trend. And now we are almost this is a great session if you guys look at, and that's how I really like to trade. If you see that, being fully patient until you find the setup and then taking the initiative within a very short period of time, profit target hit. For those who have joined later, we have just secured massive winner, and I wouldn't say in terms of PEEP, but in terms of the probability of the trade and how the trade has executed and given us that it was wonderful possible. Is waterfall possible? I don't think so gonna be waterfall. Instead, there might be shoot up back again, possibly after a pullback. Anything can happen, but I'm not on very fan of at the moment for any downside, rather the imbalance here in that direction. So looking at the 1 hour, so if you look at the 1 hour market structure, it is normally a very strongly bull market after a long consolidation. So you cannot expect waterfall in this kind of market. Let's say from a trend and then bigger sideway, you'll see that will break above and then will break down and then sideway. Those kind of market eventually prepare for like that, and then boom, big drop back below to this long-term support level. But this market, what we are trading at the moment, is just has broken out of this consolidation, and not only has broken out of the consolidation, but also it has got out of this. This is a trend line, okay, a triangular pattern, and the market has broken in both directions. So we saw there is a break back above here or downside, and which is basically a trending market. So as the triangular pattern has formed in this area, right, and with this triangular pattern in this market, the price has broken out of that level. If you look at the lower part of this structure, it is creating series of higher low here. So with that series of higher low, do you think a retest of 15 minutes is a good idea? Do you think a retest of 15 minutes, you mean the 15 minutes support? That means here. EMA. Okay. EMA, 15 minutes EMA, so just here. Still it. Now, this market now more of determined by the direction is more of determined by, that means the area of value is more of support and resistance rather than EMA. So if you look at the 15 minutes here, we see 10 EMA is being respected. Now the line that I have drawn here, if you look at this, is the 1 hour support, and this candle is still 29 minutes remaining, that means half of the time. And the previous 1 hour candle is big bull candle with a narrow wick at the top. Now this hour, the market is coming back to this 4097 level. Okay, so if you look at the 30 minutes, that's here is also from here, starting with this move, every 30 minutes is a series of higher low with a complete rejection from this 10 EM of 30 minutes perspective. So dropping to this support on the 1 hour and the 30 minutes is a very high area of value. This is the first level that you can look at for buy, which is 5 minutes 20 EMA coming to, rather than 15 minutes or 30 minutes. 30 minutes support, 1 hour support coming with the 5 minutes 20 EMA. That level could be our next target that we can look at. And there is a narrow, very narrow FBG in that area. Okay. And it's also, if you look at, it's a trending market, a more pullback, another more pullback. So see, the swing low is not broken here. It's still maintaining that series of higher low. So breaking below will be a very important area of value for a possible upside bias here in that market. And here the market structure is building that momentum for a potential move that we can see here in that area. So we'll be looking to see if any entry along the way in that area. So we had two trades earlier. One is using the system that we are using, fully automated. So we had a great feedback from our members. Thanks for confirming in the chat. So one of our members, it was a massive hit, such a good trade and profit. Thank you for confirmation in a live in our verified group. So bringing that in the front. So our members, thank you for your confirmation and also feedback. Here is it was a massive hit, such a good trade and profit. Thank you. So we keep trading that well. Profitability is our first priority. Okay, in trading, everything is set up. The only thing that we need is profitability, right? This is what we need to look at. We don't need to be right all the time. We need to be profitable. Most traders want to be right, don't want to be profitable. But if you are a real trader, always want to be profitable, don't want to be right. Being more wrong but being profitable is more important than being more right but not being profitable. All right, so that's the secret. That's what we are looking at, and that's why we are so profitable as a trader here. So another members just a few minutes ago posted another feedback. I'd like to bring that here. It's now in the group. So for those who are in the premium chat for our automated system trading, you can check that message and you can see who is the member. Probably you know him or her. TP hit on small account. This is a small account. TP hit. He's trading on a small. I also encourage you, if you are in the beginning, then to trade on a smaller account. This is a 100 pip profit target hit. Now the same trade that I have brought out from the trade that I have shared, if you guys looked at, see that everything is as it is. So this is the same trade that been copied to our members account to follow the same trade. Just few people this one that way due to the different broker account. So I have also secured the same trade has gone to our members account. So if you are our premium member, don't get that copy, then you can ask the admin, but it's just for to support you to learn and grow as a trader. But I solely encourage you to become a trader by learning to trade by yourself, so that you can become a consistently profitable trader yourself. So learning yourself, that will make you a better trader to become a consistently educated trader in the academy. And that being said, what we are looking at this next session here, looking at another entry opportunity in this live session here. And I believe that you guys enjoyed that live session, and it was absolutely great pleasure to trade with you. Still have the full NY session remaining to trade, and I will be active any trade. Also, I'm going to share in the premium group. If you're in the premium group, keep eye. If you're not on the premium group right now, you can join there also to access everything that we have with limited time offer of 95% off. You can find link below this video to become a consistently profitable trader in the academy. That being said, thank you for trading here and also joining. I'll see you again in our next live coming tomorrow twice again, London and NY session. Until that, enjoy your time and stay well, stay active as a trader. Make sure you do the risk management and trade with the trend. If you have any question, also you can use the live chat in the website. Head on to the website and ask in the live chat. That being said, we'll see you again very soon.